This is the Daily Market Comment by Rafi Boyadjian and Maria Pashukdes. Thanks for joining us at XM.com. Geopolitical tensions and recession fears appear to have faded into the background for investors as shares on Wall Street staged another impressive rally on Wednesday, while safe haven currencies retreated further. Another round of better-than-expected earnings reports for the second quarter boosted optimism about the corporate outlook. Today's earnings highlight will come from Alibaba Group Holdings, and tech stocks in Hong Kong were rallying ahead of it. Shares in Europe were mostly higher too, though U.S. futures were mixed, suggesting a pause for breath after yesterday's big jump. The S&P 500 closed up 1.6%, and the Nasdaq Composite by 2.6%. Also contributing to the upbeat mood in equity markets was the ISM non-manufacturing PMI out of the U.S. on Wednesday. Growth in the U.S. services sector picked up some steam in July, while the prices paid index dropped sharply, and another indication that inflationary pressures are easing. Nevertheless, Fed policymakers continued to push back against market expectations of a rate cut in 2023 in fresh remarks yesterday. But markets are either taking solace from the messaging for the September meeting, where policymakers are leaning towards a 50 basis point hike, or they are simply not convinced by this hawkish rhetoric. Tensions between the U.S. and China remain elevated following House Speaker Nancy Pelosi's visit to Taiwan on Tuesday. The move has sparked large-scale military drills by the Chinese military around Taiwan's coastal areas. But markets aren't worried that the situation will escalate further, and the flight to safety is receding, pushing the Japanese yen broadly lower. The dollar was back above 134 yen on Thursday, though against other currencies, the greenback edged lower. The loonie underperformed following yesterday's plunge in oil prices. Crude oil prices initially spiked on the OPEC Plus decision to raise output marginally in September, but a large build in U.S. inventories in the weekly report later on sent the price tumbling. The pound, meanwhile, was recovering modestly from the dollar's resurgence as traders awaited the Bank of England's policy decision due at 1100 GMT. The Bank of England is widely expected to announce a steeper rate increase of 50 basis points, but the pound may not get much of a boost if the MPC vote is split, or if Governor Bailey signals that more big hikes are unlikely. This is today's Daily Market Comment. Thanks for joining us at XM.com.